Hello, this is Ahura. We'll be with you to review the U.S. Personal income and spending data, including also the U.S. labor market data and market reactions. As always, let's go first check the data, and then we can see how and what we can expect from these data. Labor market data, starting with the challenge of job cuts, which is increased by almost 140% compared to previous year. While in these numbers last month but it was printed at minus 1.6%. On the annual scale, in 1 month, just in July, and comparing with the previous year, generally we had much more job cuts in more factories and more manufacturing, especially the manufacturing sector, which means that the labor market is showing some signs of weakness. Total cut jobs increased to almost 62,075 person. That's while this is what's interesting, as you remember earlier in the previous video where we talked about the Federal Reserve meeting, I mentioned here that Fed Chair Powell mentioned that in the labor market, while the supply is low, the demand also is lower. So supply and demand both slower together. That's why even thought we have less created jobs, we have less hiring. Still, the unemployment rate still around 4%, 4.1%, 4.2%, and sounds to very close to the maximum labor market. These data means that in the labor market, maybe we have more people that they get to move towards the self-employment or anything else or any other idea. That means that which ended finally with the least demand for hirings. That's why the number of the hirings also, even thought the number of hirings slowed, even thought the job cuts slowed, but still the labor market seems like resilience. That's initial job. That's why we look at this number. Initial jobless claims increased only 218. We have only 218,000 request for unemployment benefits, apply for unemployment benefits. Continuing benefits also, client for the benefits also increased by 1 million, it was steady at 1,946,000, which means that, as I mentioned, which means that the labor market is still strong, even though there is more signs of cooling down. While the 4-week average also fell to 221,000, which means that the labor market, comparing it around 250,000, it's very amazing. It's very good. I mean, normally we had the 250,000, so these data so far show that the labor market is full, is good. Now there's another thing, another data from the labor market we have, and what's that? That's the cost of the hiring. The cost of the hiring and the cost of the employment also slightly increased by 0.9%. I mean, it was unchanged comparing with the previous quarter. It was unchanged. In the second quarter, we had 0.9%, but it's slightly above the 0.8% expectations. Employment wages also increased by 1%. This is well. Totally, when we are looking at the labor market, you can say that the labor market, even thought there is more cuts, still the cost also is higher. And now that these higher costs, while the income also is normal, all these they can move towards inflation side, because when the labor market is fine, the income also is fine, so the people they can spend their money. So still, these data means that the demand for the products and the services in the market could still continue higher, which means that even though the labor market, even though the inflation also had some signs of the coming down or lowering in the previous months, like 3 months ago, 4 months ago, in past 2 months started again increasing or started to stay sticky around current levels. Look at these numbers. Core PCE price index, which is the Fed's Fed's inflation. I mean, when the Federal Reserve talking about the inflation, it's a favorite number of the Federal Reserve. This is the number that Fed's making is this decision based on that. This is a core PCE price index. On the annual scale, it's increased by 202.8%. unchanged from previous months. However, we can say that the previous months also in initial estimates it was 2.6 or 2.7. It's in the final number increased to 2.8%. And these months, for June also, the core PC price index increased by 2.8% annually. On the monthly scale, it increased by 0.3%. The headline PC price index also increased by 0.2% monthly, and in the annual scale, we can see this number at 2.6%, which means like 0.2% more than 2.4% that we had in May. Generally, these numbers and these data says that inflation is still sticky. There is no sign that these numbers can continue falling down, especially knowing that the labor market also is strong. And now we have more, we have a labor market, strong labor market means that the people, they have income. So this income can hold the inflation and the demand higher. Look at the spending numbers. The personal spending also increased by 0.3%. The people still spending money. Even thought it's slightly lower than 0.4% expectations, but comparing with the previous months, it's increasing. The income also, the personal income also is increasing by 0.3%. It was like after several months of the 0.7, 0.8% increase, in June, in May, we had 0.4% fall, but now we can see again that this personal income also again started to increase. So these numbers generally says that the people, they have money, they are spending, they have income, and the real spending also, or real consumer consumption also increasing by 0.1%, still the positive. Inflation is 0.3%, core PCE price index and PC price index 0.3%, income 0.3%, expanding 0.3%. It means that the people are like the confidence level should be high, around 97%. The confidence level is fine. Increasing is fine. The wages increase is fine. Spending is fine. All these numbers saying that the Federal Reserve somehow is right about holding the rates. You look at we made earlier we watched about the Fed. Let me check again. Let's check again together. As you can see here, the chance of the rate cut even in October is less than 50%. The chance of a rate cut in September again also is less than 50%. You can see here we have only, I don't thought it's less than 4%, 40%. We have less than 40% chance for the rate cut in September, and we have more than 60% chance for holding the current rates. These data generally says that the U.S. economy is still strong, labor markets is moving acceptable, I mean fine. And generally, these data says that for now, economy can hold the current rate for longer and can hold this pressure, and we can count on just like holding the current rate. So probably now instead of 2 rate cuts for the 2025, maybe we can count only on 1 rate cut later this year. So this again more hawkish tones and more hawkish policies from the Federal Reserve. That means that. Looking at the charts, we can see the effect of these data. US dollar index increasing fast towards 100. But still, we have to, as mentioned, we have underlying risk. We are in a market about the economic growth, about the tariffs, about the geopolitical tensions, and all these risks holding the doubt on the economic growth in the market, which means right now we have to be a little bit more careful about the US economy and real data that is coming from there, and that can put a little bit more cautious and bring the more cautious attitude to the markets, and that's why we can say that the US dollar index could be limited around 98, 100 for now. We can't expect too much higher than this, but at the same time, we can't expect that numbers to fall under 97, 96. So generally, the market's counting on the stronger US dollar. I mean, thought the market's counting on the stronger US dollar, we can see that the gold, while the gold was falling down, again started to increasing around about 3,300. Why? The reason is that higher for longer could be negative for the stock markets and could end as negative for the stock markets. The money moves out from there. Many people they book their profits and they exit from the stock markets. And where this money moves, Most are the safe havens. One of these is the gold. So even thought the dollar index is getting increasing, the dollar index is getting stronger and it's increasing. It's the gold also at the same time increasing. That can be the negative for the oil. So this data means that the less chance for the stock markets, less chance for the economic growth, because the higher for longer could be negative for the generally for economic growth, and that can increase, that can slow down the demand for the oil and energy market. On the other hand, for the stock markets, what's happening for the stock markets? S&P 500 is falling down. At the same time, the same thing could happen in the Nasdaq. Why? Because these data and these numbers means higher for longer and higher for longer when we are having higher rates, and the more hawkish policies, these hawkish policies and higher rates can slightly can increase the cost of the borrowing, can increase the cost of the loans, and they are the negative for the companies. Even though the earnings are fine, but still these numbers can limit the earnings reports positive affecting the market. So the stock market sounds like you get a little bit more serious about what's exactly going on in the stock in Federal Reserve, and they can get more cautious with positive with the sorry for with the less chance for two rates cuts right now for in 2025. We can say there is a less chance for stock markets also. End of this week, we will already have we will already have the almost biggest company's earnings results. So it means that from the next week, when the market's coming to the point that okay, already the most earnings are down, we have the most positive news that they could support the stock markets is down, especially if the tomorrow's labor market data is slightly getting stronger than expected with this inflation data, with the Federal Reserve decision. We can say that stock market next week could be really under pressure. Same reaction for the Nasdaq, and same reaction for the S&P 500. Generally, these data and these news, they are not positive for the stock markets. As for the cryptocurrency usually in the last months, they're following the risky assets like the stock markets. With these data, we can say we can expect slightly more pressure for the cryptocurrencies as well. Next target for the Bitcoin, 114,700 could be the next target. Yep, that was the data and meaning what's what they could that with what's these data means for the market and how the market could affect or react to these numbers. Hope it was useful for you. If you had any other question, write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.